talk to me first about what kind of recovery you're seeing, because you are indeed seeing a recovery. You're saying you're just not going to get back to 2019 levels maybe for 5 years.
Matt, good morning. Yes, we're seeing a slight improvement. The measures we have announced are not temporary, they are structural measures. And we all know that we're going through a transformation. We all know that we have to reduce our dependency from the combustion engine, and therefore these measures have to be understood as structural measures, as amplifying what we have done in the past and speeding up our transformation.
So in that case, Klaus, I mean, there's been a lot of talk here in Berlin.
So how much of the restructuring... Sorry, go ahead, Matt.
Sorry. I just want to ask, there's been a lot of talk here in Berlin about the possibility of help, of aid, government aid for this industry, and especially for suppliers like yourself. Merkel has until now resisted calls for more state aid for the auto parts makers, but do you think it's necessary?
Well, look, Schaeffler is a global player. It's a bigger supplier. There are certainly smaller players in Germany, and I think the German government, Madam Chancellor, have done a lot here to support the industry. There's this large program that was announced some months ago. So far, we at Schaeffler, we have always decided to go for self-help, and that's also what's behind these measures. It's now important that we execute them. We have downsized the company in the last 18 months quite significantly. About 8,250 jobs have been reduced. There's another program that has been introduced end of last year, and we're now amplifying this out of a self-help attitude.
You have the self-help attitude. Good morning, Klaus. But are you also in conversations with governments about what more they can do for the sector?
Well, clearly we are part of a group that is in constant discussions with our Bavarian government, with the German government, and we participated in the summit. We are a company that always emphasizes the importance of technology. I think this moment in the development of the crisis and of the overall transformation of the industry is important. We need to look into the future. We need to make companies stronger for the future, and that's what we're trying to do at Schaeffler.
And when you look at the job losses you've announced, Klaus, how much of that would you attribute to coronavirus then, and the slowdown and the disruption there, and how much would you attribute to structural shifts from combustion to electric engines? You've mentioned that it's both, but how much of what is the balance of those two factors when you decide to make these redundancies?
Well, that's a little bit difficult to split. This is targeting Germany and Europe. In the past, we have done a lot outside Europe, and now it's important to optimize our European footprint, to slim down overhead, and also to think into the future in terms of investment. So this is a program that is clearly paying attention to the structured shift. We want to reduce the dependency on the combustion engine as a Schaeffler group, and the situation has been aggravated by the more difficult environment. We are losing 20 million cars this year. How fast this will recover remains to be seen, but I don't think that the recovery will be V-shaped, at least not in the car industry, and we need to go step by step and prepare for the future.
You're raising $1.5 billion in a new share sale. How does this fit into your restructuring, and do you have further capital needs beyond it?
And now let me clarify this. We're not raising capital. We have asked for an authorization. And an authorization is not an issuance of share. That's important to understand. That's a big difference. This authorization has been announced some weeks ago, and it's there to complete our toolbox on the financial side. But it has nothing to do with the restructuring. Let me say this very loud and clear. We have no intention to finance restructuring costs through a capital raise. These are two separate things. The one is there to complete the toolbox. The other thing is there to accelerate the transformation.
So does that mean you don't intend to raise capital? You don't need to raise capital anytime in the foreseeable future?
There's no need to increase capital with respect to this restructuring program. Schaeffler has always been a cash flow strong company, and we will continue to focus on our cash flow generation power. Once again, we are not going to finance restructuring cost out of a capital increase.
All right, Klaus, I just have one final question about supply chains, because there was so much talk at the beginning of this crisis about, companies wanting to bring their supply chains closer to home, and obviously the automakers are, right next door to you. Do you feel like you have an edge over competition, even if the recovery isn't V-shaped? Do you see more European car makers doing what they can to really bring their supply chain back closer to home? Or is the industry so global that it's not going to make that much of a difference?
I think the real advantage we have is that we are more diversified. We are a global automotive supplier. We have a strong industrial business that should never be overlooked. We're an automotive and industrial supplier. That gives us clearly more stability. And it gives us also more optionality going forward in making Schaeffler stronger. In terms of the supply chain, so far the supply chains have kept up quite well. Yes, we have to monitor the development there very carefully. That's what we're doing. And I think that here it's important that the risk that may still sit in the supply chain becomes more understandable. We see at the moment that all our suppliers, the suppliers to Schaeffler, hold, and we are in constant talks to make sure that this also continues into the future.